That a brief overview of the activity we saw on the Nigerian markets yesterday. What's your perspective on the markets at the moment and where we're headed from here on out?
Good morning, Alishia. Well, I think the market is basically reacting to Q3 10 results. Generally, the market was expecting a much better performance from the conglomerate sector and also the banks, but it appears that we've seen growth slow down, especially in the banking sector, and that's why we're seeing the market trading sideways. But however, the Nigerian market still remains a talking point for international investors as regards as one of the best frontier markets available in the investment space now.
Well, of course, we've had banks dominating conversation over the recent past and still today, with the AMCON board having been finalized. Market reaction to that news coming to the fore yesterday afternoon?
Well, the Senate approved the board of the Asset Management Corporation, and it was on the news that the Asset Management Corporation would commence operations immediately. The market has been awaiting the approval of this from the Senate, and we would soon see the Asset Management Corporation acquire these toxic assets, especially among the CBN district-controlled banks. And so with that, the market has been awaiting this liquidity from the Asset Management Corporation. So based on that, we expect the market to react positively to this news.
Certainly, where we've already seen the market react very positively to the kind of merger and acquisition activity that's set to filter through. Let's take a look at that. First, City Monumuent Bank has made that bid to acquire local rival Finbank. How are you rating the compatibility there and the synergies we could see between these two banks?
Well, FCMB is primarily a wholesale bank. However, the bank has indicated its strategy to grow its retail business. On the other hand, if you look at Finbank has strong competencies in electronic banking platform. So based on that, I think FCMB can leverage on the strengths of Finbank to really expand its retail business. In terms of funding, FCMB has probably one of the highest capital adequacy ratios in the industry, in excess of 30%. So I think they'll be able to fund any acquisition among the distressed banks.
Yes. Are there any potential risks that we're looking at on that front? Because shareholders on both sides will be looking at, that when they're assessing the price tag. And, we certainly haven't seen any details emerge on that front, where First City Monumuent Bank wasn't the highest bidder for Finbank.
Personally, I think there may be issues around valuation of Finbank. As we all know, the CBN rescued banks all have negative equity. But apart from that, I think the CBN they've really been on the banking reform exercise, and I don't think any other significant risk may affect this transaction. I think the CBN and as well as the advisors are on top of this transaction.
We've got Bank PHB, Intercontinental and Union Bank also in talks with suitors. Any word on who these potential bidders are just yet? Has anything leaked into the market?
They've all indicated they have strategic investors that they're talking with, but none of them have come out to say who the strategic investors are. Probably as things unfold, probably before the end of the year, we may get to know who these bidders for these banks are, but at the moment, nothing has been disclosed to the public.
So far, though, and looking now more holistically at the sector in general, the performance of banks, looking at those Q3 2010 results so far, it certainly seems to be promising. What's your outlook for the last quarter of this year, Kingsley?
A review of the Q2 results, we can see that there has been growth, but remember we're comparing it with Q3 09, and that was when the CBN NDIC did a sector clean out. So most of the banks reported losses in the corresponding period last year. But if we look at operational metrics in terms of cost-to-income ratios and NPLs, and we compare that to what was on ground in Q2 10, we don't really see much change. And I think the last quarter of the year will still maintain that pattern. Maybe we may see the banks improve on their liquidity as the Asset Management Corporation comes on stream, acquiring toxic assets. But I think the banks will probably sit on this liquidity and not really grow their risk assets much in the last quarter. So in the last quarter, I expect the the bank's performance to be flat. That is similar to what we saw in Q310.
Well, we had a couple of results filtered through on the fast-moving consumer goods space as well. Nigeria's bottling company saying yesterday that its pre-tax profit fell 39% in the 9 months through to September. What are you making of that? Because there had been at one stage a lot of optimism around Nigeria Bottling Company, which is, of course, a Coca-Cola franchise.
NBC, if we recall, in 2008 had exceptional charges from their factory in one of the states in Nigeria was gutted by fire, and we saw the company post a marginal profit. But we've seen the company return to profitability, and generally the outlook for the food and beverage sector, it's kind of muted at the moment because we've seen the sector rally close to 50% year to date. So investors are not really expecting much upside from that sector. But probably it's a sector that we will still watch closely. And I think the results were decent compared to what NBC did in the previous year.
Would you be a buyer at this stage of the game?
I would be a hold. I would say it's a hold. Generally, the sector, I see the sector as a hold. Now I'm considering what the sector has done year to date, but I'm not really going to be an aggressive buyer of NBC at the moment.
In the meantime, we've had Nigeria's biggest construction company, Julius Berger, saying as well that its pre-tax profit fell 33%. The company's turnover, however, rose to 121.5 billion naira from 111 billion in the same period. Run us through your sense and what you've made of this company and its performance so far.
Well, for Julius Berger it's probably the largest construction company in Nigeria, but we've not really seen so much contracts coming through, especially from the federal government in the second half of the year. And the expectation was that the second half of the year, usually being that the part of the year in which a lot of contracts are awarded. But we've seen a slowdown, so that's why the revenue and profit has declined.
As a surprise to you, because we know that this is in the run-up to the elections next year, and many had been anticipating that a government would be spending a little bit more aggressively, specifically on infrastructure spend.
Yeah, but we've been saying that the government is going to spend a lot in the last quarter of the year, but we've not actually seen those monies coming through, and maybe that's why we're seeing revenue growth and profit growth for Julius Berger slow down, especially in Q310.
Does it come as a surprise, though?
I don't see that's going to be different.
Does it come as a surprise? Because, you know, like you said, there were great expectations about this. Is there any reasoning why we haven't seen money filter through as the market had initially expected and anticipated it would?
Well, the market preempted that there was going to be strong growth, but that was probably in Q210, but we've seen that in Q310, nothing much really happened. So that's probably why I'm not surprised by the numbers posted by Julius Berger on the floor of the NSE yesterday.
Well, to what extent are political risks building up against next year's national election? Because while the markets may be a little bit preoccupied with the banks right now, Kingsley, should we be expecting political sentiment to affect the market and its performance as we progress and get closer to that time?
Personally, what I think is that if investors are not convinced that the current administration will continue in power in 2010, then we may see some selling pressure, especially amongst the international investors. However, I see such views as short-term, and I think in the long run, such risk will be minimal.